There's a lot of deals and a lot of projects around impact that have, all the different layers of the layer cake to help de-risk these types of investments, where family offices can participate at their level to be able to, with several other investors, to be able to do amazing things. So I'd say those are the two sort of more unique ways to engage. Engage with other investors as part of a larger consortium, funds that do that, or just engage with each other outside of investments, just to connect with others in the family office community that might be just a little further or sometimes a little further behind than you are, to be able to find community.
Welcome to American Dreams. I'm visiting here today with Michael Meehan. Michael, welcome to today's show.
Thank you very much. Thanks for having me.
So, Michael, you have a remarkable story, and for the listeners here, can you share your background and how it got you to where you are today?
Sure. Well, I'm a bit of a one-trick pony, I have to admit. So I've been in climate ESG finance for, about 23 years. So way back in the late 90s, I got my start in technology. So I actually invented one of the first carbon trading systems. So almost unbeknownst to me. So at the time, there was only ours and one that was put together by one of the large software firms that was sold to Royal Shell. So we moved that from Canada down to Silicon Valley in the early 2000s with some investment. We grew it into quite a successful company. Sold it. I had another company in Silicon Valley during that time, which I also sold. So I was in Silicon Valley for 7 years. And then after a while, I had the golden handcuffs on. Couldn't work for anybody after we got acquired the second time. And started working with groups like the California Senate on what now is a B Corp. It wasn't a B Corp back then. It was actually interesting work. It was looking at fiduciary responsibility of directors that is beyond financial returns. De rigueur for this day and age, but back then it was the only one of its kind in the world. And then through that, I got asked to be part of a group of CEOs that would go into the White House every 5-6 weeks to advise the administration through the White House CEQ on climate finance. It was a really interesting time. And through that group, I got asked to go over to Amsterdam and run this group called the GRI. So Global Reporting Initiative. Sort of sounds dry, right? Standards, sustainability standards and so on. But these things are used throughout the world on thousands and thousands of companies to sort of understand and communicate their commitment to various sustainability issues, climate, gender equality. I saw that GRI actually just released a whole standard around workers' compensation and equality and so on. So it really touches everything. But the real meat and potatoes of what GRI does is it works with different governments around the world to insert sustainability metrics into policy. So China's Belt and Road strategy has impact baked into it, maybe not human rights, but a lot of other areas, because GRI helped put it there. And so U.S. government, Canadian government, European government, that organization worked with a lot of those. So it was an exciting time. Helped develop and launch the Sustainable Development Goals with that group. It's a very, very visible and very busy job, that's for sure. I stepped down 7 years ago. And since then, I've been living in London, England. I'm the outgoing chairman of the UK Sustainable Investment and Finance Association. So all the major pension funds, banks, sovereign wealth funds, you name it, asset managers, not just that are in the UK, but operate through the UK. So it's a big group. Assets under management in that group is about 11 trillion. And then I focus most of my time on boards. So I sit on boards of a few different ESG funds. One in Canada focuses on impact and blue economy. Another one that focuses on climate, so carbon investment. We invest in carbon in offset projects around the world. And I also donate 25% of my time and resources to nonprofits and academia. So I'm an adjunct professor in sustainable finance at my alma mater here in Canada. And I sit on the boards of several different nonprofits like the Knowledge Impact Network and several others. So still busy, but I've only really done one thing, which is really around impact and climate finance. And I should mention one more thing. So I also co-founded years ago a group called Forum for Impact, and it's a group of investors, high net worth individuals, family offices from around the world. And we meet all over the world to discuss impact and sort of engage the unengaged in climate. And this is, we take no remuneration for this. This is really just for our own networks. Our shared network is about 500 now. And we just met in the Bahamas with all of the ministers and deputy prime minister and so on to talk about blue economy. We met in Zurich this year, Singapore. We'll do London and New York coming up. And it's been a really rewarding experience sort of engaging my own network around focusing their investment in technology and time to impact. Hopefully not too much of a long intro, but I had my fingers in a lot of pies, but I really only do. And I'm a supremely unsuccessful musician as well.
Well, you've done a lot of remarkable things in helping to change the landscape of this world. I like to dive in, though, impact investing. How do you define it, and what distinguishes impact investing from traditional social responsibility?
Yeah. So I'll be the first one to say, I think the terms that we use around this type of investment are ridiculous, right? And I think practitioners are, some of the practitioners are at fault themselves, but I don't believe that there's any such thing as sustainable investment or sustainable business. There's just business and investment. And, the fact that GAAP accounting rules and traditional finance ignores a huge swath of risks for an investor or for a company, that's why sustainable investment exists. So my life goal is to run myself out of a job because I don't feel that we should really be thinking about this as a separate thing. It's really all just the same thing. So these are just risks that we don't take into account in traditional finance. That being said, there is a difference between ESG and impact and sustainable investment, social investment, and so on. The idea behind impact is you got an outcome in mind, right? I want to promote gender equality in sub-Saharan Africa, right? So every investment that I make is going to work towards that outcome. And even though it sounds like playing with words, the focus on outcome is what defines impact. So, and I work with a lot of different family offices around the world. What I always advise is focus on the outcomes first, figure out what impacts will get you to that outcome, and then invest in those impacts or partner for those impacts. These are all impacts you need to know, right? Whether you're investing in them or you're trying to avoid negative impacts, whatever. But if you have your eye on the outcome, that's important. It's very different than like a pension fund, right? A pension fund, that's a very, very different type of investing. So that's more like ESG investing, where it's more like do no harm, right? You've got 5,000 companies in your portfolio. And it's like, no tobacco, no firearms, right? So there could be all kinds of negative impacts inside that portfolio, but it's just so huge that it's very, very hard to police that kind of thing. Impact investing is much more active. You're after specific outcome. I hope that makes sense.
So let's move into current trends with impact and ESG investing. And, how has that changed, the landscape changed over the past few decades from what it used to be?
Yeah, pendulum, of course, right? So way back in the day, there were no standards, there were no frameworks and so on. And again, the purpose of these standards and frameworks are for companies and investors to understand and communicate their commitments to certain sustainability issues, and then report that back to either their LPs or report back to their shareholders or wherever the stakeholders are. But the purpose is to create better companies, to create better investors, create better investments, right? That where all the risks are. So when GRI started, I don't want to focus too much on GRI because it's one of many frameworks and standards, but it was sort of a blanket standard, and that's why it was created. Now, over the years, GRI and these other emerging standards, it became a bit of an acronym soup. You got GRI, CDP, you got all these things, and they are different. They're all very different. They all focus on different things. But as an investor or as a business person, it becomes very, very difficult because there's just too many out there. And it also became this accounting exercise or PR exercise. So there's a pendulum that swings within this investment community that you've got lots and lots of data, because everybody's everybody's reporting, at least for big companies and so on. And as that pendulum swings this way, you get a lot of investor calls to say, oh, hey, we want this regulated. We want this, these shouldn't be voluntary. We need someone policing this and so on. And as it goes from, I'm a company, I want to know where all my risks are so I can create a better company, I'm an investor. I want to know where the risks are of the portfolio, where are the opportunities that I'm not tracking right now. That's the purpose of the ESG side. But as it goes sort of this way and becomes an accounting exercise, you start to think, well, these companies are really not saying, they're saying a lot less because they're putting this out to the public to say, hey, great, look how great we are on climate. Meanwhile, they're not going to talk about how poor they are on, say, human rights, right? So you're getting a lot less information, better quality information, but as an investor, you're getting a lot less. And then once you go to like a regulatory, if it's regulated, then you're getting a tiny veneer of information, right? Very, very high quality because they have to be truthful on that point or they'll be delisted or sued. So there's a pendulum that goes back and forth between regulation and voluntary disclosure, back and forth. And recently, you've seen a really interesting political veneer to this, or lens on this, which has never existed, at least in my 23 years in this, where, large funds and funds of funds are starting to look at, well, gosh, we could be sued for calling ourselves an ESG fund. That's more of an American thing. You don't see a lot of that outside of America, but still it's very important. And one of the advisory boards I sit on for a very large fund in the U.S., remember I was at their board meeting a while ago, and the board is split halfway down the table on, hey, we've got, over 200 billion in AUM. We have a responsibility to do, to focus on impact, sustainability, and human rights and so on. You got the other half of the table. It's like, we can't mention a thing because we'll be sued in about 8 states right now. And, my advice is always the same. It's like, look, it's like that, the old doctor's advice. If it hurts when you do that, well, just stop doing that. Stop calling it an ESG fund because it's not helping anybody to call it that. But still use, as many pension funds in America do, still use those metrics to be able to guide your investment. It doesn't matter what you call it. It doesn't matter if you call it a sustainable fund, an ESG fund, or just a fund. You'll be a better fund, de-risked and more attractive to many by focusing on impact and ESG and sustainable metrics than you would if you didn't. And it doesn't matter what. Hope that makes sense.
When you look at the current trends today, do you see anything that stands out with impact and ESG investing that you find most promising?
Oh, well, promising and concerning, right? I mean, it's not a, well, I'll start with the negative, right? With any trend in investment, you get a bunch of people jumping in that know absolutely nothing about it, right? Now, this can be well-meaning, reinventing the wheel, right? You see this a lot with standards around finance, that you'll have, a couple of very well-known, investors and philanthropists jump in and basically recreate the wheel that other people have been doing for 20 years, kind of making more of a mess, right, than anything else. Whereas, but well-meaning, right? It elevates the conversation, gets more people involved, but also brings a lot of people that aren't necessarily in it for I would say the right reasons, looking to capitalize on a trend, right? And this is why you see, ESG investing is, the biggest thing. And then you read the next day, ESG is on the rocks. And it doesn't matter. It's a trend that's been going up like this. What I do see on the positive side is, and this is, pretty much the area where I work in almost exclusively now, is what are the actual impacts on the ground? And years ago, you didn't see the impact on the ground. You saw the impact in the boardroom for sure. You saw a lot of activity around gender equality and climate and, engaging communities and things like this. You saw a lot of action, but you didn't see the results, where now you definitely see them. You definitely see them. So I don't want to go into specifics, but, at one of my, those family office events I host, we had, at a recent one, we had, a big multinational ecotourism company coming in that are, that dedicated to impact for decades. And to see them coming into a region that needs development and the amount of work and diligence around, say a $250, $300 million investment to actually move the needle on climate, on blue economy, on hiring, on gender equality, on lifting people out of poverty and engaging local communities in non-OECD countries. It's pretty wild. And so the trend years ago is that was here and there. And now major brands are actually, the rubber is hitting the road now on all of that activity over the last 20 years of investment. So super interesting to see it actually working, but still challenging because, that also attracts, investors that, number one, might be well-intentioned but don't really know what they're doing. But also, number two, those that are really just trying to capitalize on a trend, which never works out in impact.
How do standards like the Global Reporting Initiative, GRI, and other framework contribute to the credibility and effectiveness of impact investing?
Sunlight is the best disinfectant, right? And even though I was CEO of GRI, I wasn't particularly happy with GRI becoming a standard, right? Because standards are, again, like we were saying before, be careful what you wish for, right? That to move everything towards regulation results in less disclosure, even though it's at a higher quality. Less disclosure, not more. So it's not just one thing. We really need sort of a broad approach. That regulatory is one piece, standards are another piece. But really, the value, I think, because I believe that there's a false dichotomy, right? That a lot of people think, well, impact, if I invest in impact and sustainable investing, then I have to sacrifice returns. It's literally not true. It's never been true, but it's been this sort of trope that's been going on for years and years and years. The value is in the voluntary disclosure exercise that GRI does, right? And that many others do as a framework, not as a particular standard. That helps create better companies. It helps create better funds. It helps identify risks that you do not see in traditional finance, right? Because traditional finance is not geared towards, what's the gender makeup of your board? What is your, what's your pay gap between the highest and lowest paid people in your organization? This is creating a better company and a better fund. So the value, I feel, with GRI and with all of these other standards as well, is understanding and communicating your commitment to important issues in order to build a better organization. And once you turn into standards, well, then you're kind of becoming a bit of for accounting bodies and for certain types of institutional investors, you need to be able to compare apples to apples, right? So that's the value of standards when you become a standard. That, if you're a big pension fund, well, I can look at this and this and this, and these three companies I'm evaluating on the same plane, for sure. Which is valuable. Again, another piece. But I feel that we chase this thing around standards and this thing around this movement to regulation, which is important, but we do so sometimes at the expense of what this is really for, which is creating better companies and funds.
Can you share some successful stories or case studies about impact investments?
All kinds. Which layer of the blended finance layer cake do you want to focus on? You could focus on, about 40 trillion in assets around the world have signed on to sort of net zero targets, right? And these are net zero targets that cover all kinds of things. Climate focuses on, blue economy, it focuses on energy, it focuses. And you have these sort of flywheels in impact that spin out all kinds of real success stories. I always think of like Enel, right? Used to be run by this guy named Francisco Storace. He's a fantastic guy. And Enel was I think it was the second largest. It's a large Italian energy company, big utility. And, it's burning coal, it's burning, fossil fuels, just, dirty as they come, in Europe. And under this guy's direction, totally transform the organization all into renewables. And now Francesco now has moved on to, to head up all kinds of sustainability organizations around the world. And he showed shareholders of a very, very traditional energy company that you can not only do better for the shareholder returns by chasing renewables in the right way, but you can have a transformative impact on not only on Italy but abroad. And other energy companies have used that example to follow. especially now that we're in this area of energy transition. So I moved back to Canada just about a year and a half ago, and I was away for about 20 years, and I was blown away by where certain markets have evolved and others hadn't. So like carbon, right? So climate change. So we read in The Guardian, if you read the front page of The Guardian and you're like, oh yeah, carbon offsets they're shifty. They're not. It's $1 trillion market worldwide. Right? Now, certain aspects of that, because it attracts bad actors, are going to be problematic, right? You're investing in a forestry project in Indonesia where nobody knows who's working on what. Well, yeah, it's going to be problematic. But you're investing in an algae technology or a direct air capture technology that is, scientifically proven bricks and mortar. Well, all of a sudden that becomes a much better investment. There are hundreds of success stories in the climate finance space. And when I left North America 20 years ago, that market was not even $1 billion. And now that market's $1 trillion worldwide. The voluntary space is probably 50 billion, sorry. And I would expect that that'll be 10, 15 times the size in the next few years. So there's a lot of success stories, but there's every success story and impact comes with, especially an impact without proper guidelines in places. You need to know where to look, because just jumping in with not knowing, where you're going to go is difficult. We talked a minute ago about ecotourism, right? Ecotourism used to be a tiny little niche, and now I think it's $1.5 trillion or something dollar market around the world. There's entire brands based on it. If you look like Six Senses. Six Senses has been around for ages. It was a Southeast Asian ecotourism, sustainable brand. But IHG, one of the largest, for I think the acquisition was $300 million or something. But it's because they need it in their brand, right? They're not doing it because they love sustainability. They're doing it because it's a great investment, because it brings people to the table. There's all kinds of different success stories. So the world has evolved. I mean, I don't spend my days convincing people to do impact investment anymore, right? It's I spend my days now, placing my own bets, but helping other people place bets in the market, and avoiding the risks that are there. So those risks are getting smaller and smaller each year, which is a good trend to see.
Well, Michael, I got one final question here. Biggest barriers to growth of impact and ESG investing. How can they be overcome?
Oof. Yeah, that's a good question. Being back in North America, I'm going to say politics. Bizarre to me that this has become a political issue. I remember in the early days of climate change and carbon markets, I was in DC, and I was speaking on stage. And I remember it was myself, and it was like the head of the UN Commission, and a bunch of us on there that we all, to some extent more than others, we all know what we're talking about. And then there was a blogger on stage. He did a blog. He has like completely no credibility whatsoever. And he's a climate denier. I remember it's the first time I ever came across a climate denier. But it's this false sense of everybody knows what they're talking about, right? And I remember when it happened. I was like, this is weird. I hope this isn't a trend. Now, 20 years later, it's become a political issue. So that hurts the market generally, right? Now, of course, like I said, there's ways around that, but the political aspect is a challenge. I don't know, other than voting. I don't know how to fight that one. But the other challenge, I think, is being able to identify where an impact provides the greatest outcomes, and where where are good areas to avoid, and by jumping in without knowing what you're doing, it can be very, very easy to go down the wrong path. So there are more and more people who are educated in the market that can guide, but going it alone, I think, is a difficult thing. And you see less and less family offices and private investors going it alone these days. But I think that's the education and engaging the unengaged on climate, which is sort of my purpose in life. That I think is the biggest challenge. that people don't just make up their own path. There's to be able to choose the right areas and choose the right bets in the market stuff.
For family offices that are interested in becoming part of your program, where would they go to get more information?
Well, it depends which program, right? So, if it's just meeting with other family offices, that's why Forum for Impact was started. It was actually started because I saw on the advisory boards of two different family offices. And, they were like, hey, the younger generation is taking over or wants to take over the family office at some point in the future. They care about climate change and gender equality, and it's not that the principles are against those things. It's more that they don't want to bet 3 generations of wealth on something they don't know, right? So, one was in real estate, one was in energy, and they're going, well, what are the pension funds in London doing? And I was like, there's 2 things wrong with that. Why are you asking me? Why are you looking at pension funds? Don't hire advisors to do this. Go out and meet with other families that might be a little further along the journey than you, right? And that, 2 became 5, now it's like 460 family offices that do this. So the idea is to engage with each other to be able to be able to move the needle on what's important and impact. So that's on one. That's on the Forum for Impact side. And on others, I do a lot in blended finance, right, where you've got public finance, you got pension funds, you have VCs. There's a lot of deals and a lot of projects around impact that have, all the different layers of the layer cake to help de-risk these types of investments, where family offices can participate at their level to be able to, with several other investors, to be able to do amazing things. So I'd say those are the 2 sort of more unique ways to engage with other investors as part of a larger consortium. We have funds that do that, or just engage with each other outside of investments. Just to connect with others in the family office community that might be just a little further or sometimes a little further behind than you are, to be able to find community. So, can help in both ways.
Thank you. Michael, it's been a pleasure having you with us today on American Drinks.
No, thank you very much. Thanks for having me.